How bad have mortgage rates crashed the Orange County housing market? Well, today we're going to dive into that and everything that's going on here in Orange County, California. I'm Jim with the Bishop team, and this is where we dive into all the key indicators here for our real estate market in South Orange County, California. We do updates like this so that you know what's going on, whether you're buying, selling, or just living in your home. So not to sound like a broken record, but interest rates ruled the day again. Interest rates in May went up another about 0.4%, almost half a point from where they were a month ago. That took us back into the 7% range during part of the month, and then it came down a little bit here in the beginning of June. That's an increase of about 0.75% over the last 2 months. Now we're still slightly below the peak, as you can see on the graph, but that's still really high, even compared to last year, as rates had already started going up. We were at about 5.5%, so we're about 1.25% above that, and then 2 years ago, we were down 2s and 3s and things like that. Now, as of this filming, we're about a week to 10 days before the Fed is going to meet again. There's speculation that they might raise the short-term interest rate again, although a lot of economists and real estate experts are saying, please don't, you're destroying the real estate market. So we'll see what happens. Check back next month and we'll recap what that has done to our local real estate market. Let's dive in. First thing we're going to start with is supply. Inventory did finally start to go up about 12% month over month going into June. Now, we're still at historic lows, but we did see an upward trend, which we hadn't seen much of all year long. We are still down 10% from the beginning of the year, which is unprecedented. We're also down 31% from this time last year and 75% from 2019. That's a lot. The main reason inventory is so low is because sellers are not putting their homes on the market due to the high interest rates. So recently I had predicted that our inventory level would go below last year's record lows. As you can see in the graph, we did go below that line, and we're looking to continue below record levels for this time of year and in the next several months. The number of homes that have come on the market that have been listed through May is down 39% compared to last year, and we're running about 50% lower than any other year the last 15 years. 763 homes came on the market in May. We've never been below 1,000 homes coming on the market in May, so this is, again, the severe drought of homes coming on the market, low inventory, and it's causing lots of problems, both for buyers and sometimes for sellers. So how's demand? Demand did decrease in May about 6%. You can see in the graph, April was the high point for buyer demand. That's the number of homes in escrow, not the number of homes that are closing. Typically we see about May is the peak. It looks like we might have peaked a little bit early this year, back in April. How are sales? Well, closed units are down the 21st month in a row, meaning May to last May, April to last April. It's been trending down 21 months in a row, just part of the slowdown of our real estate market. And that gap is predicted to increase as fewer and fewer homes are coming on the market. If we're listing 50% fewer homes, eventually we'll have 50% fewer sales just because there's nothing to sell. And in fact, the only time we've seen fewer homes sell in April and May was COVID 2020, when the market completely shut down for a brief period of time, and we had fewer sales then. Otherwise, 2023, the lowest spring market in terms of sales that we've ever seen. Here we're going to look at what's called our market index. It's the ratio of the number of homes for sale versus the number of homes in escrow. Normal market, you might see 3 or 4 homes for sale for every 1 in escrow. Well, we went back to inverted in April. We stayed inverted a little bit in May, part of May, and coming into June, we're not inverted anymore. What does that mean? When you're inverted, instead of 3 or 4 to 1, you actually have more homes in escrow than for sale. Extremely hot market in terms of supply and demand. So at the beginning of May, we were at -9%, which means there's 9% more homes in escrow than for sale, and as we got into June, we went to a positive 8%, which means there's 8% more homes for sale than are in escrow. Still a very tight market, but not inverted anymore. Basically, demand is gobbling up supply very quickly, although at a lower level. So across South Orange County, we're just slightly above a 1 month supply of homes. Rancho Santa Margarita is at the head of the pack with about a 2-week supply, and Dana Point is plodding along at 2.3 months supply. Still low across the board in all the cities here in South Orange County. So what has all this done to pricing? As expected, high interest rates crashed market. So some had predicted that prices would be going down, and they were kind of wrong in that prices actually went up, albeit 1% in May, and that was 4% in April. So our rate of appreciation slowed down, but still prices did go up on average on a $1 per square foot basis in May going into June. So longer term, that puts us 2% below the peak, which was right about a year ago. So yeah, we are 2% below the all-time highest prices ever, as you can see on the graph. And we're up about 53% from December of 2019. Let me say that again, we are 2% below the all-time high. For sellers out there, knowing that you are just 2% below the peak of the market ever, might be a good time to have a conversation to see what your real estate plans are in the next couple of years. Don't try and time the market, but there are things that we can do today, whether it's next year or in 10 years, that can help position your home so that it's going to sell for the most amount of money. It's part of what we do for our clients. And again, whether it's this month, next year, 10 years, 20 years, we can strategize with you. You can click on the link below to schedule a time to do that. We'd love to help you out. And again, you don't have to be selling now, but there's things that you want to do to protect your investment and potentially add value. Also, feel free to reach out to find out what's going on in your specific neighborhood. Neighborhoods are different within the city, cities are different within the county, and on and on. Real estate is local. That's why you want to talk to a local expert like us to know what's going on. Whether you're just staying put or you had some thoughts of selling, give us a call. We'd love to help you out. And we are here to help you make the right move. I'm Jim with the Bishop team, Berkshire Hathaway Home Services, your leading realtors here in Orange County, California. We'll see you next month.